Hello everyone, this is Manjula Devi P, working as Assistant Professor in GFGC Kanakpura. In this session, we will discuss about measurement and recognition of employee benefits in the books of accounts as per Ind AS 19. So first and foremost, what is employee benefits? If you have prepared the statement of profit and loss, which is the profit and loss account. Earlier we used to call it as profit and loss account. Now it is termed as statement of profit and loss. In that, under the heading expenses, you have one of the item called employee benefit expenses. Now what are the items which comes in that, and how to recognize it, and how to when it becomes an expense, when it becomes a liability, all that has been prescribed in Ind AS 19. So any benefits provided to the employee during the period of their employment or even after the termination until the settlement is made, all such items like the salary, bonus, any retirement benefit, so all such things are considered as employee benefits. Generally, it is recorded as an expense if it is already paid during the accounting year. But if it is due but not paid, in such case we recognize it as a liability. Until it is paid, it is considered as a liability. So let's see what are the employee benefits generally which comes into picture. First, we have short-term employee benefits. These are the expenses which are to be paid before 12 months. Like if you take the regular expenditures like salary, bonus, wages, PF contribution by the employer or any contribution by the employer towards the employee, then it is called as short-term employee benefits because it has to be paid within one accounting year as they provide the service. Then we have other long-term employee benefits. So these are the benefits which are not to be expected to be fully paid within 12 months after the end of the accounting period. Suppose if it is long term, like you can pay after 1 year, then they are called as the long term employee benefits. Then we have termination benefits. In this case, if the employee is terminated by the employer, it's not the resignation by the employee or it's not voluntary retirement taken by the employee, but employer is terminating the employee, then whatever the termination benefits to be given, that is also part of the employee benefits. Then we have post-employment benefits. These are the employee benefits which are paid after the completion of the employment. Say it may be like a pension or it may be like any amount which is paid after the employment is done with the employer. Then how do we recognize it? Any of this item, whether short-term benefits, long-term benefits, termination benefits or post-employment benefits, the question is how do we recognize and measure it in the books of accounts? Where is it has to be shown? Once the employee renders the service to an employer, the expected amount of short-term employee benefits, like I told, salary, wages, PF contribution, ESI contribution or any such remuneration or any such expenses incurred by the employer towards the employee has to be recognized as an expense if it is already paid or recognized as a liability if it is due for payment. So usually it happens like say March salary is paid in the month of April. So when you are closing the books of accounts on March, it is not paid yet because you are going to pay say on April 5th. So maybe at that time you can consider that as a short term liability or current liability. Otherwise, if it is paid, it should be recorded as an expenditure. It is considered as a revenue expenditure generally, except when other standard requires to be capitalized. Generally, it's a revenue expenditure. As I said, it is treated as one of the item of expense in your statement of profit and loss. In exceptional cases, it may be capitalized. So what are the general short-term benefits? Paid absences and profit sharing bonus plan. Suppose if there is no sufficient workload in the factory, and if they are being like paid vacation or paid absences, even that is considered as a short-term benefit, and any other profit sharing or bonus plan is also considered as the short-term benefit. Then post-employee benefit, like after the employment is done by the employee, like as I said, it could be a pension, it could be a retirement benefit, it could be a settlement by the employer towards the employee. So all those things are considered as the post-employee benefits. Then long-term employee benefits, if it is a long-term paid absences for more than 1 year, if the company is paying for the employee and he is not working but still the salary is being paid, then it is called long-term paid absences. Long-term service benefits, long-term disability benefits. Suppose if an employee becomes disabled during the employment, during the at the workplace, then the company is liable to pay the disablement benefits, maybe for a quite long period of time or until the employee is alive. So such thing is called as long-term disability benefit. Then profit sharing and bonuses, like we have employee stock option and things like that. Then any deferred remuneration, like you are paying the remuneration over a period of time, one lump sum amount you are paying, you are spreading it over number of years, then that is called as deferred remuneration. So these are all long-term employee benefits. Then termination benefits. So here this does not cover if it is a voluntary termination or mandatory retirement. These benefits comes into picture only if employer decides to terminate the employee. So all those post-employment benefits given, whatever the plans or whatever the terms and conditions they had agreed with at the time of taking up the employment, and salary to be paid during the notice period. So all those things are considered as the termination benefits. So if we have a quick recap, if we take a quick recap of what we discussed in Ind AS 19. So this talks about the employee benefits. It gives the definition of what are the different types of employee benefits we have: short term, long term, termination, post employment benefits. What is the meaning of all that? And what are the conditions in which it has to be treated as an expenditure or a liability, whether it's a current liability or a non-current liability, whether it's a revenue expenditure or deferred expenditure. So all such things is being described in Ind AS 19. So as I said, it could be a short term which has to be settled within one accounting year, like the usual salary, remuneration, bonus, such things, or it could be long term, it could be retirement benefit or the termination benefit. So if it is already paid, you record it as an expenditure. If it is due, you record it as a liability. Again, if it falls due for payment for more than 1 year, then it becomes a non-current liability. If it is settled in the immediate future, that is within one accounting period, then you record it as a current liability. Hope the concept is clear to all of you. Thank you very much for watching it.